So let's do a single best chart, and this is the optimism chart. You remember the gloom, folks. 10% unemployment. The world's coming to an end as we know it, and a lot of people got this call right. What they didn't get right was this stunning persistency of improvement under 5% down to the unbelievable level of 4%. Brian Levitt, the help wanted sign is out in America.
It is.
That's all there is to it.
It is. It's been stunning. It's been a stunning decline, and it's what we should expect now. Some 8 years into an environment where the U.S. has grown 2% for a prolonged period of time. Now, that 2% has not been enough to please most everyone, and wages have been generally modest, and a lot of it's accrued to profits and shareholders and less to the workers. But the reality is, given where we were in December of 2008, this is a sustained improvement and warrants looking at.
Bonus round. We can do. I'm doing this right now, folks. Me and Justin Chart-Banner are nailing this. This is our single best chart. Bonus round. There is the amazing, most optimistic chart of America, Brian. That is claims adjusted for population. We've never been here. What is the symbolism that we've never been with such a help-wanted America, and yet so much of America is miserable?
I think the symbolism is that, the point I was making is that we've had a good environment for job creation, and we have not seen a lot of people laid off for a prolonged period of time. The reality is we're in an environment where we're in a secular environment where a lot of the profits are accruing to the shareholders and to the businesses and less to the workers. So we have not seen a significant pickup in the wages. We have not seen a significant pickup in median household income, but we've seen a substantial pickup in U.S. corporate earnings. And, for investors, that's been a good thing. The U.S. markets are up 2.5 times over this period. For workers, we're seeing modest improvements, but not enough to please the country as a whole, and obviously led to unexpected political outcomes in the United States and the UK and other parts of the world.
Brian, I just want to quickly get your reaction to PIMCO's call. Not that I'm one to question what PIMCO says, but 70% chance of a recession in the next 5 years, given that we're 9 years into the recovery, certainly in the US, not really sticking their neck out.
Right. I mean, it's not going to be the age of the cycle that matters. I mean, when I think about it from the perspective of the U.S. Treasury yield curve, I mean, we're at 1% on Fed funds. We're at 2.20 on the 10-year Treasury rate. As Tom points to the unemployment rate, for the Fed, when can they raise rates if not now? Credit spreads are okay. The dollar's generally weaker. We're not seeing huge capital flight from the emerging markets. So when, if not now? The problem is when you start to hear talks of 2 rate hikes, 3 rate hikes, 4 rate hikes, you can quite clearly see how you could flatten the yield curve further, potentially even invert the yield curve over the next few years. That, of course, reduces credit creation. That, of course, reduces earnings and would lead to a recession. So we don't have to. It's going to end like all cycles end with the Fed raising interest rates. The good news is with inflation generally modest, this can persist.